Hey guys, if you've been trading for a long time but your deposit stays the same or slowly depletes, the problem isn't the market or your strategy. In this video today, I will reveal 3 simple principles that help stop losing and preserve your deposit. No complicated schemes and no secret indicators. We will jump straight into real trades and analyze where most traders are damaging their income. Let's go. Why having multiple strategies often leads to losses. So a common mistake is constantly changing strategies. One day, one strategy, another tomorrow, and yet another the day after. So it seems like you're searching for the best solution, but in fact, you're just losing control. Each new strategy brings new emotions, doubts, and mistakes. The downfall isn't the strategy itself, but the chaos. You shouldn't have chaos. You need calm, analytical thinking. That way you'll stay profitable. I don't believe in a universal get rich quick recipe. That's a fairy tale. So I believe in principles that work under any market conditions, whether you're trading minutes, 5-minute charts, seconds, crypto, forex, and others. So if you follow these principles, your balance will stay alive. If not, even the best strategy won't save you. So different situations require different approaches. So an upward trend, a downward trend, or flat markets, the same strategy might not work in all cases. So you should have at least 3 basic scripts prepared. One for an uptrend, one for a downtrend, and one for sideways markets. So you can always work profitably. And why focus on long-term results? Looking at results over a series of trades is crucial. So one trade or even 10 trades doesn't mean anything. The significance lies in the overall run. So if you see each trade as the last one, you've already lost. So profit and losses are just working points, and your balance is decided over a series of trades, not a single entry. So now switching to practice, I select a currency pair, and based on this payout indicator, I chose the pound dollar. And looking at the 1-minute chart, there was a decline. Now it's kind of stabilizing, and the market is moving towards these levels. So I will consider a buy, wait for a small pullback, and then enter. Right now, the price might dip slightly, and I'll open a buy right now accordingly. And I will monitor developments and also act accordingly. So the main reason for losing money is emotions. So fear, greed, and lack of rules lead to losses. So you need a clear set of rules and proper risk management. So if a trade doesn't go well, set a limit for losing trades. Say if you have 2 unsuccessful trades, it's time to change your logic or your currency pair. Avoid martingale. Don't increase your position 5 or 6 times in a row during a losing streak. If something goes wrong, change your approach. Trading emotionally or trying to punish the market after losses usually ends very badly. So if you losing trades are better than a series of failures. Remember, it's not individual trades, but the entire series, and your balance is built over many trades as well. The goal is to break even or make profit. So getting out even Steven is already a victory. And as of now, I'm in profit. That is, our logic worked. We opened a buy position from the level, following the trend, and many people don't understand that breaking even is also a victory. They want to make money right now, which I understand, and which is why they are putting pressure on the market. Professional trading is not about losing money. If you've maintained your balance, you've already won. And remember, I have a Telegram channel where I discuss strategies and tips, give tricks, examples, and talk about how economic news influence the market. So lots of valuable information. Subscribe following the pinned link, and I'll be happy to answer all of your questions. So if you're unsure about a trade, it's better not to enter. This is a smart strategy step. Missing a trade is better than entering without confidence and then panicking, okay? So for example, now the candle is bullish. I'll wait for a small pullback and then open a buy slightly above. The upward breaks look strong. It might dip briefly and then continue towards this level. I'm very confident in this trade. And even if the trade is a loss, I can recover using martingale, but I emphasize, don't overdo it and approach everything wisely, okay? So now a very strong breakout has gone up and is actually going very good. And I think it'll approximately reach this level here. A reversal is just possible. No, it even breaks further through. So I think it'll secure confidently. That is, we entered well, waited for a small push down. I didn't expect a very long one, but fairly large candles with long wicks are forming, and that is shadows. And this is just a signal that you need to enter with the trend. I also want to mention that I often trade on the 1 minute time frame. I don't like very short time frames like the 10 seconds or 5 seconds time frames. They don't drain the deposit because they're bad. They do it because they amplify emotions. If you lack discipline, seconds-based time frames will definitely eat your deposit. You'll get carried away and start clicking chaotically without understanding what's actually happening on the chart. And I want to protect you from this. That's why I highlight this point every video. So why are larger time frames more stable? Because the bigger the time frame, the less noise there is. Less noise means fewer emotions, and fewer emotions reduces mistakes. So another thing I want to emphasize is the size of the deposit. Having a too large deposit is psychologically overwhelming, while a too small one tempts you to take excessive risks. And you need to choose a deposit size that allows you to trade calmly. And how much money do you really need to start? Exactly as much as you're willing to lose without panicking. So everything beyond that will only add stress. Increase your deposit gradually and don't risk too much, and trade with a clear and calm mind. So as you see, today I made 2 successful trades. I relied solely on tech analysis, levels, and candle patterns. So what's the takeaway? What are these 3 main ways to avoid losing money? Let's summarize. If we remove all the theory, noise, and informational clutter, then there are just 3 things that help me avoid losses. First of all, control yourself, not the market. I don't try to guess where the market is heading. I control the risk size, the number of trades, and my mental state. The market can do anything. My task is not to break my balance. Second, trade for the long run, not just in and out. One trade alone doesn't decide anything. It's a series of trades that count. It doesn't matter how a specific entry closes. What matters is what you have over a week or month. My balance remains intact. I aim to stay in profit. And even if some trades go in loss, that's temporarily. So I already know how I will act afterward. And third off, trades without emotions and without rushing. I enter only when I'm calm and confident. If I have doubts, I don't trade. If I feel emotional, I take a pause. A pause is also a strategy. In trading, those who make money are those that do not guess more often, but those who make less mistakes and know how to preserve their balance. Remember that. If you found today's video helpful, please leave comments. Let's do more practice and analysis. I also remind you that I have a Telegram channel where I share strategies, tips, and provide access to copying my signals. There's a lot of practical and theoretical knowledge there, and it will be very useful for you to study. I'm also open to talk. Feel free to message me, and I was glad to see you in today's video, and I look forward to seeing you in my next future videos. Have a great evening. Goodbye, guys.